Hello and welcome to another update video about LINK. The LINK chart has moved back into the support range highlighted in orange. So we're really ranging up there in a very messy structure. The current pullback, which I have labeled as a wave 4, it's becoming quite protracted. It looks similar to what we had here, which was also a wave 4, but of a larger degree. This is a wave 4 of a smaller degree, which was also characterized by an overshooting corrective wave. In this case, I've labeled it as an X wave, but actually this could simply be an ABC structure. 1 second. I think that works well. A wave down, B wave up, C wave down, it's fine. Doesn't make a difference though. But yeah, we have, first of all, on the larger time frame, we have the minimum number of waves to the upside complete to consider this entire increase since the June low is complete. So it's technically complete. I don't like the last bit here, so I actually prefer one more high, especially as long as we're holding within the impulsive price channel. So as long as the lower support range there, or let's call it the lower boundary line of the ascending trend channel, as long as this isn't broken to the downside, I would prefer one more high into the mid $20 region, maybe even low $30 region, but one more high would be preferred. I have, to say it very clearly, no confirmation that a that a substantial top, a more substantial top is in. That could be wave 1, because these 5 waves to the upside can be considered a wave 1 of an impulse. And then the wave 2 pullback is due at some point. Could happen now, but I need to see some evidence for it. And that evidence would mean basically a break below the Fibonacci support range here at $16.78 and a break below the upper boundary, the lower boundary line of the trend channel. I think there's a good chance we find support here once more. But you see there is a potential for a head and shoulders pattern as well. Now, that's only a potential until it really forms and breaks down, but it's a left shoulder here, head. And if we now form a lower high, well, all it needs then is a lower low to basically confirm the move down in wave 2, which would then be an ABC structure. Yeah, and for example, it could then be A wave, B wave, C wave. And if that's wave 2, fine, but it might just turn into a larger A wave. Then we get a larger B wave rally, yeah, and we come down in wave C. So A, B, C. And that might land somewhere in the area around the previous wave 4 of lower degree. And that is at around here. What's that? 12.50 roundabout. Yeah, so 12.50 to $13 as a potential support for wave 2. But I will be able to give you a more clearly defined support area once a top is in place in wave 1. So that's what I'm watching. The micro support area is quite clear here. It's between $18.81 and $16.78. And yeah, a break of the same will basically go together with a break below the lower boundary line of that trend channel. So it's still possible at the moment that we extend higher, and I prefer that actually. I think it would look better still with one more high. I mean, don't get me wrong, even in this move from the January low, we have 5 waves up. But that to me looks like a 3-wave rally. So it was a correction in my opinion. Yes, there are always other options, but I cannot keep that. I cannot with full confidence call that move complete. This was just too much of a correction here to count as the overall top of that increase. It's possible though, but then I need to see further evidence. I hope I make that clear. At the moment, I would still prefer, as I said, one more high in wave 5 of 1. So I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.